Hello and welcome to another update video about gold. Well, what a day, and it's good to see that gold pushed a bit higher because this fulfills my primary expectation in finishing off this wave 5 of 1, and then we are ready very shortly to go down in wave 2. It's good to see this. Because this completes in a very clean way this ending diagonal here in wave 5 of 1. Yeah, there were two scenarios we talked about, both actually a very similar outcome. It was a bit concerning yesterday that we briefly dropped out of this ascending wedge, which is generally to be considered a bearish pattern, basically a pattern of exhaustion. But as I mentioned to you yesterday, there is obviously still the view that we are going to finish this wave 5 as long as we are holding 1779. Below 1779, I would have had to make the alternative count. Here, this A, B, C count highlighted in blue. Just a second. A, B, C. I would have had to make that primary expectation because that could have been a wave 1 down here, a wave 2, and then a wave 3 down. But to validate that, there was a need to break 1779. Didn't happen. CPI data was positive for the gold market today, and it allowed the price to push higher in wave 5 of 1. So that's good. That's good. Why is that good? Because it allows us now to understand all of this as a proper 5-wave move. 1, 2, 3, 4, 5. This was a small trend reversal area, basically a long trade entry, and this was the larger trend reversal area. I mean, I can't really recommend to you what to do when trading here, when entering, exiting positions, but I can only say very carefully that might be time to either think about taking partial profits if anybody's trading this, or moving up the stop loss. Yeah, and we have a very nice area, in my opinion, to move the stop loss to, which in my opinion would be either below this swing low that was made yesterday, here at 1789 or 1788, or, and that's the other option, which leaves a little bit more risk open here, even though we can't really talk about risk because had you entered here or here, then you'd be massively in profit here with this position. The other possibility would be to set the stop below the wave 4 low. Yeah, do I think this move is over to the upside? At the moment, there is no sign it has topped. Ideally, it pushes up a little bit more. I'm honest with you. But again, in my opinion, it would be time to take partial profits here for various reasons. First of all, this pattern is technically full or nearly full. Yeah, it's usually very hard to pick the absolute top when selling and to pick the absolute low when buying. However, this larger support area was really spot on. The thing is though that also this is a range. Yeah, so you can always only define a range, not one price point where the price will definitely go to. I mean, we can make some assumptions here. Okay, I mean, I could say, right, we've got this wave 1 here in yellow, and I added to the wave 4 low, and the proper target would be the 1.618 extension at 1850. Now we haven't reached it yet, but we're really close here when we came up to 1836 today, or 1837. It looks like we need one more wave up, but, well, we don't really need it, but I think it would be quite likely, because if I go to the 1 hour chart, bear in mind this is an ending diagonal pattern. What could be is that we had here a leading diagonal in a wave 1, in that wave 5, here a wave 2. This could be the wave 3, but it might still be ongoing. Then there could be a wave 4 and a 5 to the upside. Could take us really to that 1850 level, maybe even a little bit higher. What you regularly see with these ascending wedge patterns, and this is no guarantee that it's going to happen, but what you regularly see before such a pattern finishes, that you get a so-called throw over. That would mean that this wave 5 pushes slightly above it, gets exhausted, breaks back down. And that usually then signals the completion of the pattern and of this 5-wave structure to the upside. We did rally significantly since we reached my long-term support area, which was down here. We touched it where we came into it various times. Yeah, we've been in this range for a couple of months, and then we rallied significantly after reversing out of it, after breaking out of the channel quite impulsively. We've moved up 13%, 13.5% in whatever, a month maybe. Yeah, and this is the most significant move that we've had since this correction really started. Well, not really. The correction actually started technically in August 2020. This year was only a corrective move to the upside. I mean, this was the most significant move, but then since this last leg down started, this is the most significant move to the upside. And I think it's nearly exhausted based on the Elliott wave count, based on the ascending wedge, based on the bearish divergence we can see on the 8-hour chart and probably also on the daily chart. Yes. Yeah, you see a bearish divergence here. You can see that bullish momentum is sort of reducing overall. And you see that it's getting exhausted. You know, we are nearly overbought on the daily chart. Not quite overbought, but nearly. I mean, generally the 4-day chart still allows for further upside, but that could be for the next wave up. Daily overbought, yeah, 4-hour was overbought today. So we are sort of getting to the limits, I think, what gold can do in this scenario here. Let's see. Yeah, at the moment, very clearly, there is no sign it has topped yet. So an option might be just to move up the stop loss, yeah, and just continue with the rally as long as it's continuing, basically. These waves can always extend out, but from what is reasonable, I would assume, you know, we are sort of nearly done. Should we break really above this, well, substantially above this 1825 level, which is the wave X high, I mean, the next target, technical target, would probably be that 1880 level. And we talked about 1850 is the extension. And then if we move above that, probably here the 1880 level. That this wave 5 pushes up that much, it would surprise me. But it would just be another sign of bullishness and would actually confirm the primary count here. But be ready for a move down now at any time. The pattern is full. These can always extend out, but technically the pattern is full. That doesn't mean it needs to come down now, but it means be ready for it. And then the wave 2 support area would be waiting. This would be the next possible entry point for anybody who wants to trade long. Again, this is not, I'm not telling you to buy or anything. This is entirely your decision. But what I can do, I can define the support areas where I believe the price is going to turn based on the Elliott wave method and count. I have to adjust this area slightly into the region between 1666 and 1730. Okay, that's my update about gold. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.